समझ नहीं आ रहा अपने सैलरी इंक्रीमेंट का क्या करूं।
बेटा इतना क्या सोच रहा है? अपने म्यूचुअल फंड्स के एसआईपी का टॉप अप करा ले। दिस इज द राइट टाइम।
क्या? समझ में नहीं आया।
बेटा इतना क्या सोच रहा है? अपने म्यूचुअल फंड्स का एसआईपी टॉपअप करा ले। दिस इज द राइट टाइम।
अब समझा।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
For the past couple of days, the Prime Minister has been speaking. He's messaging, and his messaging is basically along four axes. These four axes are gold, second, fuel consumption, purchase of gold, consumption of fuel, third is foreign travel, and fourth is fertilizers. In fact, he's gone to the extent of saying that farmers should use 50% of the fertilizers they've been using and they should go organic. You can't go organic so suddenly. And we also know that Sri Lanka decided to go organic. It did not quite work out. Nevertheless, we have to understand where he's coming from. So first of all, the four items: gold, fuel, which effectively means crude oil, because crude oil then becomes diesel, petrol, kerosene, everything. Travel, foreign travel which consumes foreign exchange, which is translated as spending under LRS. Spending or investments under LRS. LRS is the liberalized remittance scheme. That is something that Vajpayee government had started in its last years because it felt more confident about India's foreign exchange reserves, and it also wanted to give the people of India confidence and also the rest of the world confidence that India was not so starved for foreign exchange. Since then, that scheme has continued, and that's the scheme through which Indians traveling overseas spend. Indians also can invest overseas, they can buy assets overseas, they can also spend on education. That's under the LRS basket. So what am I doing today? I'm first of all trying to explain to you with data where is his concern coming from under these four heads or over these four baskets. Number two, what is it that's compounding this problem for him? And third is what is the upshot of all of this? Because finally the upshot is a current account deficit. Current account deficit then has to be financed, for which government has to go and either buy dollars in some way or to spend out of its reserves. The result of that is a drawdown on your foreign exchange reserves. That is the brief summary of what I'm going to say. Now let's go over it item by item. Gold first. Why did the Prime Minister say don't buy gold for a year, even for weddings? Nobody will listen, particularly for weddings. People will buy, and funnily or sadly, you can choose your expression depending on which side you are on. Gold is a commodity where even price is not a nudge, which means if the price goes up, people don't buy less gold, because as the price goes up, maybe greed comes in and people think gold will go up further, so let's buy a bit more. So see what's been happening with India's gold imports. India imports almost all of the gold it consumes, almost all. India is also the second largest consumer of gold or buyer of gold in the world after China. So see how India's gold imports have gone. Financial year 21, that is 2021, that was the COVID year, so India did not import that much gold by India's own standards. Still, it was $34 billion. That was a year of negative economic growth, substantially so, and yet India imported $34 billion worth of gold. Next year, it goes up to $46 billion, which means an increase of 35.3%. As India's economy has picked up a little bit. Then next year it has come down, and I will tell you why. Next year it's come down to $35 billion, and the reason is, and that is when government has increased the import duty on gold from 7.5% to 12.5%. So the import has come down a little bit, 23.9%. Let me also tell you, from then on also confiscation of gold from smugglers and incidence of gold smuggling also started going up. Then the following year, financial year 23-24, gold has again gone up This gold import has again gone up by 22.9% to $43 billion. Financial year 25, that is 24-25, again there is a boom, an increase of 35%, 34.9 all right, to $58 billion. And this year, the financial year that just ended, financial year 25-26, our imports of gold have gone up to 71.98 billion, let's say $72 billion. Now, why did I say that gold is a commodity where price doesn't seem to affect people in terms of curbing purchase? In fact, pricing on gold has the opposite nudge. Usually when the price of something goes up, people say, all right, it's too expensive, let me not buy now, let me buy less, I will buy next year. With gold, people don't believe price will ever come down. And when it's going up, people think it will go out of my reach, let me buy and collect now. So last year, for example, 25-26, a lot of the household bought more gold because they thought it was going up and up. We've done several episodes of Cut the Clutter on how everybody was buying gold. There was run on gold and on silver, and also that central banks across the world were stocking up on gold because of uncertainty at a geopolitical level. It was in the same year that because gold was going up, gold ETFs, exchange traded funds, also became fashionable. Remember, when fund house sells you ETFs, gold ETFs, they have to buy a matching amount of gold, physical gold, to pay back in case you call your money. Now they are not the government. Government issued its sovereign gold bonds in 2016. It did not keep any gold. It did not buy any gold and keep it because they are the government. They can do what they want. And since then, they've been changing the tax rules, etc., to try and protect themselves or try to limit the damage that that scheme has done. But a fund house has to keep that much gold. Now RBI has given the fund houses a little bit of leeway to also buy gold futures, which effectively comes to the same thing. So all this additional gold has been bought. In the process, India's gold imports have gone up to $72 billion this year, 24% over the previous year, which was 35% over the preceding year, which was 23% over the still preceding year, which in turn was a little bit lower than the year preceding, that is financial year 22, because of the increased duty. So today, gold imports are $72 billion in the financial year that has just gone past, and as we speak, there seems to be no let-up either in gold purchases or in the purchase of gold ETFs. That has got the government worried that if Indians keep on buying more and more gold, how are we going to find the dollars? Because all the gold is imported. In fact, the largest amount of gold we import is from Switzerland, and then from many other countries, South Africa, UAE, etc. Second, come to fuel. Why the worry on fuel? Why is the Prime Minister saying use pooled cars, use public transport, work from home if possible? This sounds very drastic, and this sounds very drastic because the situation has changed dramatically within the past 3 months. I will give you some data. See this graphic. This tells you India's crude imports. Again, India imports 85% of its hydrocarbon needs, crude and gas. Look at the amount of imports every year. 2020-21, everywhere will be an abnormal year. That was the COVID year of lockdowns, year also of sizable negative growth. So that doesn't quite apply. Still, we have it there for comparison. We imported $62.2 billion worth of crude. Next year, this went up by 91.6%. Only 92% because the economy opened up. We were no longer working from home. We were going to work, and the economy was booming. $119.2 billion worth. Next year, a boom year again for the economy. It went up by 32.6% to a total of $158 billion. Keep counting these billions because ultimately I will be netting off other billions. These are billions being spent. I will also be netting this off against billions that come in. These are billions that are going out. Then you will see what happens. What do you get under the bottom line? financial year 24, that is 23-24, crude imports in value came down because that is when India started to get the full benefit of cheaper Russian crude. And Russian crude became a very large component of Indian imports. So by value, India's crude imports went down, not by volume. By value, India's crude imports went down by 16.5% to 132 billion. Next year again, 24-25, 137 billion, went up by about 4%. By volume, kept on rising, but once again, we were getting cheaper Russian oil, and also the global oil prices were moderate, which is something that continued until March 11 of the last financial year. Until March 11, India's crude basket was between $62 and $70 per barrel. And then on March 11, suddenly it went up to $113 plus. That big a difference came up almost overnight. Frankly, if you look at all this, the word of caution that's come from the government should have come right then, because a war had started and we knew the consequences of the war. And second, government should have upped fuel prices right then. That is something that we've been saying editorially. Please see this 50-word edit that was written in April saying that, look, don't wait for elections to take place. This is something that has to be done in the national interest. India is running up these deficits, foreign exchange is running out, RBI is struggling. If you postpone a hard decision, it does not soften the impact of a calamity. What we are seeing right now in energy markets is a calamity. That's the warning today that Uday Kotak also gave out at speaking at the CII, where he said the oil shock has still not hit us because there were already stocks with many countries, stockpiles, many countries, refineries, there were stockpiles of crude which have been consumed. The real impact of oil price rise will be felt now. Now, last year 25-26, India's total crude oil imports in dollars were about $150 billion. So this has gone up from 137 to 150. That's only after about 5 weeks of increased prices because of the war. But see what's happening now. If these prices continue, or even if prices settle down, say around $90 or $100, then this bill could go up to 170, 180, and who knows, if prices remain $110 and above as they are now, up to $200 billion. That will punch a very, very big hole in India's current account situation or India's foreign exchange situation. That is foreign exchange earned versus foreign exchange spent, because all the energy purchase is in foreign exchange. So gold I explained to you, now I explained to you crude. This makes us understand why the Prime Minister is saying buy less gold, ideally buy no gold, and also conserve fuel. Number three, why is he telling people to travel less? Now, I told you that Atal Bihari Vajpayee in his last years, that was the shining India years. India had 3 good quarters of growth, and India, which was always used to being very short of foreign exchange, suddenly had a fair bit of foreign exchange. It was a comfortable situation. So Vajpayee, Jaswant Singh, Yashwant Sinha, people like them said, let Indians feel good. Why should they go and line up at Reserve Bank of India for every little expense? Give them a certain amount that they can spend, invest overseas. And that's how LRS, or Liberalized Remittance Scheme, started. Before that, I will tell you, when I was going to Pakistan, Afghanistan to cover the wars there, or the Gulf War, the first Gulf War, or the breakdown of the Soviet Union, or wherever, for a foreign story, I had to go to RBI with an application signed by my editor to ask for foreign exchange. For every country or zone, there was an amount of foreign exchange. There was a limited amount of foreign exchange allocated. That means you could take that much and no more. So going to a neighboring country, it was $165, which means you had to pay for everything, your hotel, your car, your tips, your food, everything out of that 165. If you were going to Europe, it was about $250. I will tell you, it was impossible to function as a journalist, full-time journalist like that. Nevertheless, we did manage because those were the restrictions. And if you were going to Soviet Union, it was very complicated because you only got some of your allocation as dollars. The rest you got in what was called as convertible rupees. Theoretically, those rupees could be converted like dollars into rubles in the Soviet Union, where the street price of the dollar was maybe 20 times, 30 times, 50 times the bank price of the dollar. It was a mess. Nobody was able to use that money. Even the hotels would not take those travelers' checks of convertible rupees. It was a big struggle to manage. All of that was over with LRS. LRS over time became quite popular, and what's happened since then is that whenever India becomes a little short of foreign exchange, although India has been increasing its foreign exchange reserves, whenever India feels a little stressed, they put some sand in the wheel of LRS. Usually it's by putting taxation, or what is called as TCS. TCS is tax collection at source. This is different from TDS, tax deduction at source, because tax deducted at source goes to the government, right? It's gone, it's tax paid. TCS is just collected by the government. At the end of the year, when you file your tax returns, you can take credit of this tax. So effectively, this tax is paid back to you. Initially, 5% tax was put on LRS so that government will keep an easy database, and also it was a little bit of friction in the process, some sand in the wheel, so people will think there are 5% phasega. Later, Modi government took it to 20%. I will bring you to that. Took it to 20% to deter people. At that point, for some time, there was a little deterrence. It came down, but then people got used to it, and LRS and foreign spending by Indians has gone up. See the trend on this graphic. Once again, 2021 is only 13 billion under LRS. You will expect that, because that was the year of COVID. Then next year it's gone to 20 billion. Then next year 27 billion. Then 31 billion. It's peaked in financial year 23-24 because that is the year that the government put 20% TCS. Now you would have thought 20% TCS means people will spend less money overseas or send out less money overseas to buy bonds, mutual funds, homes, etc., or for education. But no, the opposite happened, because when the government put this tax, there were protests. Then government deferred it to October. So a lot of people then thought, we don't know what the government will do tomorrow, so let's quickly go out and spend money. And it's in that rush that LRS spending or LRS outgo became the highest. It became the highest. In fact, it's not been equaled even in the last financial year. 23-24 was 31.7 billion. Then the next year was 29.6. This year, the year that just ended, was about 28.5 billion. Yet for the government, it's 28.5 billion foreign exchange gone out, of which about 3 to 4% goes out for education, some for medical treatment, a lot for asset creation. Maybe the government doesn't mind it so much if Indians create assets outside, or maybe they do. However, that's one category. The largest category of spending under LRS is what? It is not the mutual funds or properties that Indians are buying in London or Dubai or Lisbon or wherever. It is actually travel. So go back and see, and on your graphic you will see it in a different color. See the proportion that travel accounts for. Again, forget 2021 because nobody was traveling in that year, but in the years following that, travel has constituted the largest single component of LRS spending. Last year it was $16 billion. Year before it was $17 billion. Year before, 23-24, again it was $17 billion, because this is also when people had the post-COVID travel boom. People now felt confident and free, and they thought they could go out. Also, this is the year when Indian stock markets, mutual funds had a boom. Sensex got to 73,000, and a lot of Indians felt the wealth effect and they thought they could spend. And that's how foreign spending and foreign travels went up. Now the Prime Minister is worried that if this continues, from where will RBI find the dollars to fund it? Because people will go to the bank and ask for dollars. Will the RBI then keep taking money out of its reserves, or will it let the rupee weaken? At this point, as we talk, I read from various estimates that the RBI net ends up spending from its reserves. It's not exactly spending, it's basically converting its dollars into rupees, about $5 to $6 billion per week. If that goes on through the year, remember a year has 52 weeks, and that would create a big problem. Otherwise, as far as India's foreign exchange reserves are concerned, India is nowhere near the crisis of 1991. Anybody who says it on social media, etc., is not talking the truth. India at this point has nearly reserves to fund about 11 months of imports. A crisis emerges when your reserves are below 3 months of exports. At the same time, India is a cautious country. India is also a country which has many plans, many ideas, and nobody knows how long will this crisis go on for. So it's better to cover your risks now. However, once again, I would say that at least on fuel, government should have started at least 2 months earlier. They did not, obviously for electoral reasons. Now, why the nudge to the farmers to use less fertilizers? Once again, see the chart, and it tells you how India's fertilizer consumption has trended. Forget 2021, $15 billion worth fertilizers we imported in financial year 21-22. 21 billion it went up to. It peaked in 23. Remember, that's also a function. We are not talking volumes, we're talking value. It's also went up because that is when global crude prices went up because of the Russia-Ukraine war, and also fertilizer supplies were under stress from Ukraine, Russia, many other providers as well. So that year fertilizer prices were high. It went up to 21 billion. Then the following year, sort of closer to normal, 17 billion. And then the effect of cheaper Russian crude came in. So 14 billion. Last year it was 17 billion. And the estimates for this year, because crude prices have gone up so much and fertilizer prices have gone up, plus fertilizers are in short supply, so you will have to bid for what's available. The estimates now are about $22 billion. Now, alongside this, two more problems have come in. One is the FDI issue. India is getting a lot of FDI. Even this financial year, 25-26, India has got about $90 billion of FDI. But that is inward FDI. FDI has come in. At the same time, there's been a lot of repatriation. Many MNCs which set up businesses in India have done IPOs and taken their money out, because that's why they came. They came to make money. Also, many Indian companies have invested overseas. So that is outward FDI. You then net off inward incoming FDI with outward FDI or repatriation and see what you are left with. If you see financial year 25-26, you can see every other year, and you can see the trend. In financial year 23-24, net FDI was about $10 billion. 24-25, that is when larger repatriations have started. Net FDI is negligible. It's only $0.35 billion, which is really a rounding error or an accounting error or pocket change. And then finally, in the year just concluded, 25-26, net FDI is just $6.26 billion. We still have something in plus, but just about $6.26 billion. India can do a lot better than that. India needs to do a lot better than that if India has to balance its current account. That's a very small amount, because usually what happens is when you have trade deficit, you make up for it by way of capital receipts, which is net FDI or net FPI investors. If that goes down, then it becomes that much more challenging for a country to balance its account. And that is the problem India is having right now, because if net FDI is almost zero right now, in spite of a lot of FDI coming in, FPI actually is a completely different situation. It looks like the FPI inflows have completely collapsed. And see the numbers there, and these are quite alarming. In FY 2021, COVID year, we still have plus 6 billion net FPI. Net FPI, debt and equity, What that means is people who've come and bought your shares and your bonds, and people who've netted off against people who've sold them and taken their money out, 6 billion plus. FY 21-22 is 20 billion minus. You are 20 billion minus. That's because in that year, a lot of people have sold their equity, probably because global equity prices are going up, particularly in America, and they've moved money there. So equity investments plus 19 in 2021, minus 17 in 21-22, and now minus 4 in 22-23. So there is an improvement. Debt minus 13 in 2021, minus 3 in 21-22, now minus 1.5. You net off equity and debt. So you have a total deficit of $5.5 billion on account of foreign portfolio investors in 22-23. And then you have the boom year in 23-24 when Indian markets are doing very well. And that's when from minus 4, your equity investments from foreign portfolio investors have gone up to $20.8 billion. Your debt investments have gone up from negative 1.5 to plus 20.8 billion. That much money is coming, which means your total inflows from foreign portfolio investors are $41.6 billion. This was a great year. By next year, Indian equities have started tiring out, as we know, 24-25. So inflows are minus 5 in equities, but still debt is robust at 31.1, and we have a positive balance of $26 billion. This has changed dramatically in 25-26 and for the worse. Equity investments are minus 16.5, which means many more people have taken out their money than have brought into India. Foreign portfolio investors at this point have lost interest in India, as every every data point tells you. So India has lost means net $16.5 billion has gone out, has been pulled out by foreign portfolio investors in equity. Debt has got a little bit of money. Net, India has lost $14.8 billion from its reserves on account of foreign portfolio investors losing interest in India. This reversal in 25-26 is quite stark. In fact, it's quite stark and quite worrying. This is something that needs probably policy attention. There is no point cursing the foreigners, saying that if FPIs don't come to India, we don't care. We have our Indian investors, they will take their SIPs. The fact is that Indian middle class, which has been buying SIPs for 2 years, has hardly made any money on their SIPs. It's still keeping the faith, but one, you can't count on it forever. Maybe they'll start switching to gold, as some of them seem to have done lately. And second, it's not even fair to them. Now let me try and explain. This is a non-economist, an absolute non-economist effort, although I've been helped with data, research, and also graphics by Dr. Vidisha Bhattacharya, who's our consulting editor for economics and writes a column, Economics with an X, that you read and watch every week. Look at this data and look at this graphic. This tells you merchandise trade deficit. These are goods, commodities, products that you buy from overseas, you import, and that you export. What is the net situation? Net situation, India has almost always have a negative balance on merchandise trade. COVID year, of course, it is very little because we imported very little. We also did not export that much, but we imported very little. Consumption was down. Next year, it went up and went up again. The deficit, the merchandise trade deficit became the highest in financial year 23, that is 22-23, highest so far, mainly because that year, I suspect, the crude prices globally went up. Next year, it improved a little bit. But it was still about $240 billion, not small change, of merchandise trade deficit. And yet it got worse in 24-25, and 25-26, the year that just passed, we got our worst number ever. All-time record, but a dubious record of a merchandise trade deficit of $333.2 billion. What happens when you notch up a merchandise trade deficit? And it's been happening to India forever. How come India then has foreign exchange reserves? How come India does not have a crisis? How come 91 is not back with us? That's because India has built a big business in services. So a lot of our merchandise trade deficit is made up for by services. Check therefore this graphic. What this graphic tells you is, number one, the big thick bars are your merchandise deficit. Then in green underneath the bar you have figures that tell you the surplus that you have from services trade. So you import some services, you also export services. That is always in surplus. It also gives you the percentage of merchandise deficit that your services export surplus covers. So 2021, the COVID year, it covered about 86.7%. So COVID year, we almost were even Stevens on our current account. Next year, it covered 55.6%. Then next year, 54%. Then 68.4% because we had a boom in services exports. Financial year 24-25, 60.7%. You will also see the numbers of your services export surplus. And even in a tough year like 25-26, when we have notched up a merchandise export deficit of 333 billion plus, more than 57% has already been neutralized by our services trade surplus. So please, for heaven's sake, when we talk about manufacturing, yes, talk about manufacturing. India needs a lot more manufacturing. India needs to reduce that merchandise trade deficit, but also give a little bit of applause to your services industry, which is making up for a lot of that deficit. Then what happens? You see your current account deficit, and then you see all the other money that comes in. You see salaries, people earn salaries from overseas. You also see remittances. India gets almost $140-150 billion in remittances from people working, Indians working overseas. A lot of them from the Gulf. In fact, 40% of all our foreign remittances come from the Gulf. That can be under strain also as well if the war resumes in the Gulf. All of those remittances and other chota incomes. Remittances are a big income as in dollar comes into India, convertible currency comes into India. All of that then makes up for a lot of the deficit. At the end of the day, last year, 25-26, India was left with the current account deficit of $29 billion. The previous year was $23.3 billion. The year before, that is financial year 23-24, 26 billion. And the year before that, 67 billion. Remember, that was the year when oil was very expensive. And this year, if anything, it promises to be or threatens to be even more expensive than that. So at the end of everything, after services export surpluses, remittances, etc., you are still left with a deficit. That is your current account deficit, and that is what then RBI funds by dipping into its reserves. I do hope that all of this gives us an idea of where the Prime Minister is coming from, by what is he so concerned about, as to go almost to raise an alarm or multiple alarms. That said, I will conclude with just a little bit of humble opinion. Number one, the four things that he's talked about. Number one, gold. Gold for Indians is an emotional thing. It comes from the heart, not from the head. It comes from the heart. And in fact, if they get the sense that there's going to be a bigger global economic crisis or an Indian crisis, unfortunately, they will run more towards gold, not away from it. Whatever the wisdom in what the Prime Minister is saying. That's the way we Indians think. Number two, fuel. Just as with gold, rising price does not work as a nudge to buy less. With fuel, the opposite applies. With fuel, price is a good nudge to reduce consumption. Fuel prices should be increased. There is no izzat ka sawal in increasing fuel prices. If crude goes up, if the raw material goes up, inputs go up in price, then my pump price also has to go up. It has to be passed to the consumer. Unlike the UPA, we don't expect this government now to create some innovative oddity like oil bonds, which basically means stealing from our next generation to subsidize ourselves. So fuel price will be a good nudge and fuel prices should go up. all elections are also over, although this government should not have waited for elections. They should have done the right thing by the economy, but they should do it now. Number 3, fertilizers. I do not think you can tell farmers immediately to consume less fertilizer again. That's a reform that's been in the works, and it works in fits and starts. This is the time to work on that reform for judicious use of fertilizers and also for changing crop patterns to make them more sensible and more market friendly. That will take time, but a crisis is a good time to begin. And as far as spending overseas is concerned, I will not be surprised if the government throws some more sand in the wheels. But remember, when you add taxes, tariffs or duties on gold to a certain level, beyond a certain level, it starts gold smuggling. That is what created the Dawood Ibrahim phenomenon. And it's a story that I've told you before, but I will tell you now. When Dr. Manmohan Singh opened gold imports, I had my colleague Sheila Bhatt set up a phone call with Dawood Ibrahim. I used to work in India Today then, and I with great delight told him that Dawood भाई अब क्या होगा, अब तो आपका सारा बिजनेस खत्म हो गया क्योंकि गोल्ड इंपोर्ट अलाउ हो गया. He said मैं तो बहुत खुश हूँ, इंडिया के लिए बहुत अच्छी बात है. जिसको आप स्मगलिंग कहते हैं वो स्मगलिंग नहीं है. जहाँ मैं रहता हूँ, दुबई में रहते थे वो, यहाँ वो व्यापार है. मेरा व्यापार था खत्म हो गया, मुझे उसका अफसोस है. Then he said just for effect कि मैं तो वैसे भी हमेशा इंडिया को सपोर्ट करता हूँ. आज सुबह इंडिया न्यूजीलैंड का मैच था, वर्ल्ड कप वाज गोइंग ऑन एट दैट पॉइंट. मैंने वहाँ पे इंडिया को सपोर्ट किया, लेकिन टीम ही हार गई तो बहुत दिल टूट गया. इससे नहीं टूटा, ये तो इंडिया को पहले करना चाहिए था. Maybe he was saying it with a touch of irony, but the fact is that higher taxes on gold imports will create arbitrage for smuggling. And similarly, any onerous restrictions for Indian spending overseas will then create an incentive for hawala and illegal transfer. So government has to be very careful, but it has to do all the right things. It has to also think about why have FPIs given up on India. It has to attract FPIs back. And finally, before you tell Indians not to travel overseas, what have we done to get foreign tourists into India? India's foreign tourist arrivals have been going down. We have rarely touched our pre-COVID levels in India. And if you see the government people talking, they seem to suggest that we have enough internal travel. Indians are traveling, planes are full, hotels are full. Why do we need foreign tourists? We need foreign tourists because number one, they bring foreign exchange. Number two, as they come in, Indian tourism infrastructure from aviation to buses to taxis to everything will expand. And third, tourism creates more jobs than almost any other activity. Those are areas India has to focus on the positive side. There's no point saying we don't care about foreign tourists, we don't care about FPIs. We have to care about all of them. India needs both. India needs some self-denial on the part of citizens. That's what the Prime Minister is asking you to do. But at the same time, India needs the government to go out and find solutions to this problem. And some of those solutions are entirely virtuous.